Guys, I was dying before the show. You know when you drink
You're
something
still
and
alive and breathing and talking. So
when you drink something and it goes down the wrong hole? Not fun. What's going on, everyone? Happy Friday, and welcome back to Sin City Crypto Live. I'm one of your hosts, David. We are coming at you from our studio here in the heart of Las Vegas, Nevada, with our daily, only on the weekdays, live shows. Before we get into the content, quick disclaimer. Nothing that's said on this channel should be taken as financial advice, so please, as always, do your own research. Speaking of content, today, it's Friday, which means none other than Forrest Day, Crypto Stackers Pro. Forrest will be joining us in T-minus 5 to 8 minutes to go over some charts, what's going on in the markets. Very excited. Also, Vitalik Buterin is scared and concerned over Bitcoin security. Polygon has been on absolute fire. Why? We will tell you. And then finally, Sam Bankman-Fried speaks out about the bailouts that his company, FTX, has had and where they are and whether it's been profitable or not. So, with that being said, I'd like to introduce you to your other co-host. Hello, Robin.
hola! It's your boy, Big Rob, back in the house. Welcome to Sin City Crypto. If it's your first time checking us out, we are an entertainment-focused cryptocurrency channel where we take the old, the boring, and the stale information and we package it up in a fun and sexy way. Also, we don't just do live streams. We also do deep dives. Periodically, we do social media postings, and not sure what else we do. But now,
We do a lot of IT work.
that's right. We also make badass thumbs ups like signs that I'm extremely proud of. And the reason I'm holding this, I'll let you figure it out. What do you think? Why do you think I'm holding this sign up?
I think because you want a thumb somewhere.
Oh,
You want to put your
barbecue
thumb on a
sauce, yes.
barbecue sauce.
So I'm really excited today, man. You know, the jobs report came back. We are still looking to hire somebody here for a $0 salary. So if you are out there looking for a job, we got that. And then what else we got?
Cardano.
Oh, Cardano's. But did you talk about that?
I have not.
That is
Guys,
the date is announced, ladies and gentlemen.
official.
The date is announced.
Official, just like a referee's whistle.
That's right.
But before I talk about that, real quick, Bro Kiyoshi put something in the chat as far as the pipeline.
Mm-hmm.
Did you see that?
No.
I didn't read it. Scroll down, Rocco, on the chat. It's no, all the way down. So he talked about Gazprom, which is the company behind the big pipeline that goes through to Germany from Russia. They do maintenance. And we were worried that they weren't going to turn it back on. They did with limited capacity. And apparently now, right there, they detected an oil leak during maintenance. And they're closing it until repairs are made. And there is no time frame to restart it.
Well.
Yeah, that's the problem with being so dependent on one country is you're essentially at the mercy of their leader.
Here's the thing. Even if they're not up to mischievous behaviors, even if everything is game for, you know, what they say it is, like, hey, man, we got some problems. Why are you so damn relying on somebody to the point to where if there's an oil leak, your country freezes? You get what I'm saying? Like, even if they're playing ball the way they say they are, like, well, we're not doing anything. We're not up to no good. That's what Russia's saying.
Let's say it's all
all
true.
fine and dandy.
Yeah.
Oh yeah. And then if you're,
we say all the time, don't put all your eggs in one basket,
yeah,
right?
there you go. So.
But I'd like to talk about some bullish news. If you're a Cardano fan, put the Cardano gang emoji in the chat. We have some big news. This is directly from IOHK, which is the company behind Cardano. Vassal upgrade date confirmed with the strong emoji. Following the successful completion and extensive testing of all core components, plus confirmed community readiness, we, along with the Cardano's Tiftung, can today announce that September 22nd will be when Vassal goes live on the Cardano mainnet. Goes on to say it's the most efficient upgrade to date, bringing increased network capacity and lower cost transactions. The upgrade will bring enhancements to their scripting Plutus. Also, Hydra will be introduced with this new Vassal hard fork. And what Hydra allows you to do is for each stake pool operator to essentially do 100,000 1,000 transactions per second. And there are close to or over now 3,000 stake pools. So 3,000 times 1,000, you do the math. That is the potential of the speed of what Cardano transactions can be like with this Vassal hard fork, with Hydra. If you're a Cardano fan, put ADA in the chat. Robin, are you a Cardano fan?
I love me some Cardano, bro.
You know who doesn't love Cardano?
Who's that?
Forrest.
I'm
I'm a little disappointed.
No?
You know, speaking of Forrest, I don't want to waste time.
Is that no roll call? Oh, well, here.
Oh, roll call. My apologies.
Yeah.
Yes,
So we'll do a real quick roll call.
Go ahead.
If we skip over your name, sorry about that. All right. So roll call. We got first in the chat today. Looks like Jimmy. And then we got Crypto Yogurt, Brokey Yoshi, Servando, Hindi, Marky Mark, Fino, and then Big Chili Willie, Lala, Sean Burns, R.A. Daniel, Bullish Kenny G up in here, Robert Salazar, and then George Ornelius, Crit Cats. We got Jason Mack. We got Running Silverback Gorilla back in here. Welcome. And then who else we got? Tox, and that rounds it out. If I missed you, say what's up. We'll shout you out later. All right. So yeah, you wanna get into it?
Yes, I do.
And Moby Sage in here. Cool. All right.
Rocco. Forrest. Did you get those chants?
Guys?
What's up, brother? How you doing?
Did I get what?
Is that how you doing?
Hold on. I think we had I think I cut out for a second.
Oh, you're good. I was just asking how you were doing.
Oh, doing well. How about you guys?
Good. Did you bust out any dance moves last weekend?
Yeah, dance with my wife. My wife likes to dance more than I do, but I'll get out there.
Are there any videos?
Dancer.
Are there any videos?
No.
Damn it.
Probably, but none that I've got.
Probably none that
none that are getting posted to YouTube.
That's funny. Hey, real quick, I was doing the Forrest chant. Did you get that chant when you were wrestling in high school and college?
I don't think so.
Did you have a nickname?
Did
you have a nickname in college?
No, man. I've always just been called Forrest, believe it or not.
Right.
Yeah, pretty boring there.
Like you've been coming on our show for a while. I feel like it's time to get a little more personal, see your dance moves, figure out what your nicknames are.
Did you have like a signature, I know this is different wrestling, but like an entrance, like you played like some music or something?
Don't do that.
Or did you like throw your your elbow, your elbow wristband?
I didn't have a signature. I didn't have a signature entrance, but we did have like intro songs, which were pretty cool for home meets, right? So for home meets, you'd have like an intro song, you'd come running out of the wrestling room and onto the mat, and then.
What was the song? What'd you go with?
Oh, honestly, I can't remember. I switched it up every year. One of the years I did "Mother" by Danzig. I don't know if you remember that one from Guitar Hero.
Yeah.
Oh,
yeah, that one. Yeah.
That's a good one.
Yeah.
Awesome. Well, look, Forrest, I kind of said this. We talked about the Cardano, the Vassal hard fork. Data set to September 22nd, and we know what's going to happen. Hydra is going to be introduced. So essentially, each stake pool operator is going to have up to 1,000 transactions per second. Multiply that by 3,000 stake pools, and you get close to 3 million transactions per second possible. And I said Forrest doesn't really like ADA, and Am I kind of am I out of line there by saying that? Like every time we talk about ADA, you're not very bullish.
I don't dislike it. So I think it was heavily pumped by retail volume in the bull market, and also the other reason, just as far as price action goes, a little bit scarred by the fact that it did retrace 99% in the last bear market, which worries me. So it pulls back really hard and it pumps really hard. It did perform really well this bull market. At least for the first, 70% of the bull market. And I don't dislike it. The hang up I have with it is like the whole Haskell thing is like, it is kind of like the tortoise versus the hare, supposedly more secure, more robust. But right now, developer friendliness is a really, really big thing. So I'm on the fence about it. I don't dislike it. When I hear about people having it in their portfolio, I don't cringe. I don't think, oh, that's terrible. That's a terrible investment. I don't think that at all. I just personally am not invested in it. I think one of the issues I think a lot of people have is they just feel like they're missing out if they're not invested in every good project.
Yes.
And Cardano's a good project, but there's other opportunities in the market that I'm going to take advantage of, and there's opportunities in the market that I'm going to miss out on. And you don't have to be in every like I'm in AVAX. Look. You don't have to be in AVAX. There's other stuff that can fill that gap. You could be in Cardano instead of AVAX. You could be in Near Protocol instead of AVAX. Those are all good projects that'll probably end up doing well and be somewhat correlated in the next market cycle, the next time we see layer ones pump. And at the end of the day, you're just getting exposure to the underlying technology, in my opinion.
You literally described me in one sentence, trying to get into every good project. But, you make a good point. Haskell, I believe, is one of the, if not the hardest programming language, right? And,
so I've heard.
Right. But again, it's also more secure, but it kind of leads me down this, when we had the guy from Near Protocol on, they talked about introducing JavaScript. And so now you're opening up the doors to developers outside of blockchain, because everyone uses Java pretty much. So if you had to stick $5,000 into a project, would it be Near or Cardano to hold
Near
for the next 5 years?
Near Protocol.
I love Near.
Yeah, next 5 years, that throws a spoke in the wheel. I mean, Cardano definitely has really, really strong community, and those communities oftentimes have staying power. Like, you look at the strength of the Terra Luna community right now. Like, they're reviving Luna Classic from the dead, and that's all community based. So, when you talk about 5 years down the road, Cardano becomes becomes a little bit of a different story. But if you just ask me, like, what am I more bullish on? What am I more inclined to invest in? It's Near Protocol. In fact, that is the number one cryptocurrency on my list. The cryptocurrency that I am the most bullish on that I am not invested in. Right. So if I was going to make another investment and expand my portfolio, it would be Near Protocol, assuming I could get the entry point that I want.
Yeah, I agree. Oh, hey, so dig some deep in. I did some digging. Okay,
I saw a preview,
and I got a few photos. Okay, I got a few photos. One, without further ado, let's just explain. I went back into the time capsule and I found some antique photos of the three of us. What do you know?
Did?
Yeah,
Where?
yeah. So here, taking a look here. We got Forrest, NWCA Division 1, all academic honoree. You got over here, pretty cool little hyped up. What do you got to say about this one here, man? Is this like a promo slide that I found?
Yeah, I guess I think that was from the NCAA tournament. Looks like I was wrestling the guy from Wisconsin or something like that. I did win that match.
Damn right, you won that match.
Also, if you didn't know, if we're gonna go back in nostalgic days, I also was homecoming king, as I alluded to before in the past. So I brought a photo. I was not only the homecoming, so was my dad and his dad before him. So this is the long lineage.
You're such an idiot. You are such an idiot, dude.
So we have Big Rob here. Big Rob's
click the little
grandfather. He was also homecoming king in 1969. So
wow.
And then lastly, we did find a picture of David's grandfather as well here at Antique Desk in Las Vegas. So as you can see the caption, David's desk when his grandfather used it.
Just to give some context, there's a revolt in our community about my desk. People have started a GoFundMe for David's new desk. And
still the same desk your grandfather used.
Yeah. Anyways, Forrest, we were planning on covering this throughout the week, but we never got to it. Helium is trying to move away from their own blockchain and go on Solana. Have you heard about this news?
I have. It's very strange. I haven't dug into it deep, but I've seen a lot of Helium criticisms lately. So this is an interesting one. It's potentially going to get really ugly for them, or potentially, in future bull markets, it could be one of those massive bounce backs that, people see really high returns from.
Like, just, based off of the information you do have, do you think this is a good move, a bad move? Do you think Solana was the wrong choice? I mean, what, you want to expand on as far as what you do know?
I mean, me, I like Solana, and if I don't know exactly what the technical trade-offs were that they made this decision, or that led to them making this decision. Solana's fast. It can scale. Obviously, it's had some downtime and some issues, but those have mostly, appear to be patched and or resolved for the most part. It's not gone down in a long time. I'm bullish on Solana, so it's not like they selected a weird, it's not like they selected Flow blockchain or something that doesn't fit. I mean, I think this fits. So I don't hate it. The thing with Helium Network that puts me really on edge is I think it was CoffeeZilla did a really nice video on them, that basically they have this massive valuation, but they have no revenue. They have no customers. So the whole idea, the whole business model is that they've created this wide network of long-range, not cellular, basically long-range data network where that uses that's optimized and built for IoT devices. But nobody's buying the Helium tokens to actually take advantage of that network. And now they're trying to move into the 5G space, and they have partnerships with big players like Dish Network to build out the network and infrastructure. But the problem is they don't have any customers, to my knowledge, or any real revenue. So it's, how do you justify this huge network valuation without any revenue coming in?
That sounds like the entire Web3 as I know it. It's all about this billion-dollar valuations, is this landscape of grandeur, and it is just not there as far as the adoption of just the masses in retail. The technology is being built, and hopefully, what we've seen in the past, where you have development in the bear market, and then come the bull market, people's interest, they start opening their eyes to new technologies. I think that's where we'll go. But, I think Helium's just at the front and center for, market adoption on new technology. And, what we are seeing with Helium moving to another chain, I think is going to start being a norm. I think that these smaller projects that catch momentum, that have an innovative product that people want to adopt and people are using, if the underlying infrastructure is not as efficient as to a comparable layer one that has been building for 8 years. I know Solana has only been around for 2 years or so, but if you take Ethereum as an example, why build? Especially if you built a layer one, you have a DApp on there, you have some unique use case, and you're having a community, and you're basically pigeonholed into some technical issues, then at that point something might be better just to migrate over. And I think you're gonna start seeing that, because why build? Because basically you got two technologies you're building at once. Helium's building the layer one, and then at the same time they're trying to build a Wi-Fi network. Why not just focus on what your product does best, and then let somebody else do the more complex, or the other part of the equation, which would be the underlying blockchain technology. And not to mention, you get all of the community that comes with the underlying technology. So sometimes partnerships are a good thing. I mean, if you're greedy and you just want all profits for yourself, obviously it might be conducive to stay and develop your technology, do as much in-house. But sometimes the best thing for a business is to partner with other successful businesses, and then leverage your growth with someone else as well.
Yeah, and I think people are caught off guard by this, but I think the key thing that nobody's talked about in months that everybody's forgetting about is the Solana phone. So yeah,
but here's the thing. All jokes aside, honestly, if the Solana phone is to become successful, and it is to get a chunk of retail cell phone, market. I mean, it would make sense to use a network that is also on blockchain. Helium, I mean, it really does.
Forrest brought this up like a month and a half ago. You said you would like to see the Solana phone integrate something like Helium.
I think it would make a lot of sense. I mean, if you're going to go down that path, I don't know that that's a feature that the average Joe is like clamoring over to buy a Solana phone. I want to get it on Helium. There's probably a large enough amount of people that there's enough demand to create some sort of beneficial partnership. So at the end of the day, we kind of identified Helium's problem as not having a customer base. But if they can partner with Solana and in the Solana phone and gather customers through the Solana phone users, then that potentially solves a problem or gets them on the right foot. Yeah, I mean, look, the Solana phone thing, like I know it catches a lot of slack or a lot of flack, but so did the iPhone. I mean, at the end of the day, like, the early adopters of the iPhones, like people were like, yeah, it's weird. Why do you need your email on your phone? Why do you need that touch screen doesn't even work that good? Like people are going to be like, why do you need a Web3 phone? Why do you need a phone that has this app store that connects to all these DeFi and Web3 apps? I think the Solana phone is probably a good idea, and I see a lot of the value being in the App Store. So basically, have all your DeFi dApps or whatever within that App Store, but also you've got all your GameFi, like all of your mobile games that people monetize through the iOS or Android app stores, the Google Play stores, basically building an app store that has basically the entire blockchain mobile gaming sector, basically isolated on one phone, if that makes sense. They could potentially dominate that space with the Solana phone is what I'm saying. So I don't hate the Solana phone. I think it makes sense. I hate
Solana. One last thing I want to talk about, and then we'll send it over to you for some charts. Bitcoin Lightning Network hits a new all-time high with over 4,700 Bitcoin on the Lightning Network as far as capacity goes. What are your thoughts on the Bitcoin Lightning Network, this layer 2? Do you think it gives Bitcoin a shot, or do you think it's just you stand firm as far as your beliefs on Bitcoin? Or if Lightning continues to grow, are you open to changing kind of your thoughts on Bitcoin?
Yes. So I am I'm pretty much decided. I'd say I'm set in my ways. If things change, I will re-examine the bigger picture. But as far as I can tell, the Lightning Network scaling actually doesn't fix the underlying problem that I have with Bitcoin. So the underlying problem that I have with Bitcoin is essentially that the security does not scale appropriately in a way that incentivizes storing value. So I'll break that down for a second. In order to secure the Bitcoin network, which is a 300 billion, I don't know the market cap off the top of my head right now. I think it's 300 or 400 billion. I think it's 390 something billion dollars in value on the Bitcoin network. Right now, that's taking between around $4 and $7 billion per year to secure in terms of energy costs, right? That is a really massive overhead. And that's the price you pay for proof of work security. And I'm not saying that proof of work isn't secure, but what I am saying is we have these other competitors coming in on proof of stake that could be potential store of values or stores of value, like Ethereum, really solid tokenomics, tokens with a lot of utility and really solid tokenomics that have the capability to be a store of value. That makes Bitcoin extremely vulnerable, in my opinion, because Ethereum doesn't have that 5 to 7 or won't have that $5 to $7 billion in overhead that is constantly being sold every single day in the form of mining rewards to pay off the electricity cost. The thing with the Bitcoin Lightning Network is that the issues I have with the Bitcoin Lightning Network is it's essentially centralized. If you go to Strike, which I believe is one of the largest channels or hubs on the Lightning Network, if you go to their page, it tells you like when you give them your Bitcoin, they are custodying it, they own it. So if they go out of business, you're out of luck. It's not your keys, not your crypto. They basically have a bunch of Lightning Network channels opened with all these different vendors, right? You can operate, an individual can operate on the Lightning Network in a decentralized fashion, but then they would have to open and close Lightning Network channels with everybody that they interact with, essentially, right? And that causes that requires a layer 1 transaction fee on Bitcoin to open and close that network. So the Lightning Network, in my opinion, and I think this is a pretty objective opinion, it just doesn't scale in a decentralized manner. And it also takes value away from the security of Bitcoin. And what I mean by that is, let's say you outsource all of the transactions to the Lightning Network and everything's great and everything's fine. But the problem is that over time, right, let's say the Bitcoin network's value grows to be, like, let's say it's a $300 billion market cap right now. Let's say it becomes a $30 trillion. Let's just say Bitcoin adoption goes great, becomes a 3 times the size of gold, $30 trillion asset class. How much overhead, how much network overhead is it going to take to secure $30 trillion in network value? Because $5 to $7 billion isn't going to cut it. There's no way you could justify securing the Bitcoin network, a $30 trillion network, with only $5 to $7 billion, because that would ultimately mean somebody could come along with $20 billion, or really just $3 to $5 billion, and take a bunch of hash rate, fork the network, create double spends, wreak all sorts of havoc, attacking the network. Basically, if you have a $30 trillion network, it's going to cost probably $500 billion to $1 trillion a year in energy costs to actually secure it. Otherwise, it becomes very vulnerable.
I was thinking that, well, first of all, as the network scales, so does, the price scales, the user scale. As everything scales, you're going to exponentially increase, as you're saying, the cost to secure the network, or the cost of mining.
You guys aren't taking into account, though, 3, 4, 5, 10 years from now, renewable energy is going to be better.
It doesn't matter. You're still going to, it doesn't matter what energy you use. It's going to require substantially more energy. And if you take 10 to 20% of the global's green energy just to secure the network, that's an inefficient way of using this emerging technology that people, find, carbon, that doesn't emit carbon to the world. Now, you can get into the whole global warming thing, but the thing is if and at some point these things that people are talking about, if kept unchecked, as far as the numbers that people are talking about for energy consumption, it takes the amount of energy as Australia. At some point, if the network keeps scaling, the hash rate keeps growing, and the miners are still trying to one up each other by buying more ASICs and plugging more and more in, it's a closed feedback loop, and it's one person trying to outdo the other, one mining company trying to outdo another, and the hash rate's going to keep climbing. More ASICs plug in.
You sound like Peter Schiff right now.
It doesn't matter, and I'm super bullish, bro, on Bitcoin and crypto. But to sit here and think that it is okay to forecast 100 years out and to take 20% of the global's energy to do that, to secure the Bitcoin network, is that actually worth it? Like, and maybe that is unrealistic numbers, and maybe technology changes, and maybe the miners actually vote on something eventually. But at the course that we're at, if we were to scale, like you said, to a $30 trillion market cap, I am terrified to see what that would take away from the power grid on a global scale. And you can make the case, you're using green energy. Okay, well, cool. You use 50% of the green energy in the world. Like, you know what I mean? Like, at some point, it ends up hurting more than anything else. And then just to touch on this Lightning Network, the Lightning Network, it is everything. It goes against everything that Bitcoin's known for. It is highly centralized. The strongest points that you can make for the Bitcoin network is decentralization and security. And you give up both in its entirety to go over to the Lightning Network. And the only reason that the underlying asset that is being used is a tokenized value of Bitcoin is not, it is finally Bitcoin when it settles and they check in. But essentially, you're just using an intermediary to transfer what they call Bitcoin, and then at some point it'll check in on the network, and then you'll actually have Bitcoin. But I mean, mathematically, think about it. You're only producing blocks every few minutes. Or, was it 5 to 6 minutes on
10 minutes?
10 minutes. So you can't realistically send Bitcoin 3 times to 3 different addresses in less than 10 seconds and it actually be on the blockchain. It's centralized. It's centralized. It's in somebody else's server. If somebody else controls it, and
it goes into a pool.
And the pool is a bank account or a wallet address for a centralized entity that has multiple points of failure. And all I'm saying is that these bridge hacks that you've heard of on the Ronin and all this stuff, I know it's different, but that same premise where you keep hearing about all these bridge hacks, in the future, you're going to start hearing about these layer 2s being compromised and Bitcoin being lost because they were on a centralized party that people thought was the base layer because they were seeing Bitcoin move around in their little app, but it really wasn't on chain. So,
Forrest, I feel like you have something to say.
All those. So like all those are excellent points, and that's like there are potential high energy usage, all of this stuff but what it ultimately, the issue that I have as an investor, somebody who's looking for a store of value, is the like the competitive disadvantage that Bitcoin has when it comes to storing value based on its consensus model. So like, let's just say you have a $30 trillion, even with the current market cap, like it's $5 to $7 billion a year that is being sold to cover that energy cost, right? And as Bitcoin scales, it's going to have to use more and more energy. If it doesn't use more energy, it becomes less secure because then it becomes cheaper to attack the network. And I'm not even that concerned about attacks on the network. What I am concerned about is the competitive disadvantage that you have. If I can put my money in something that costs, that's going to have a lot of value dumped on the market every single day to cover mining costs, or I can put something into like something that's proof of stake that uses a different consensus model that uses the underlying value of the network tokens to secure the network and doesn't have to use large amounts of electricity. Over time, the two should diverge, right? Like you constantly have this negative sell pressure on Bitcoin every single day to cover the mining costs, where you just don't see that present in its competitors in the form of proof of stake. So if I have to decide where to put my money, I'm going to go with the one that has less overhead. Just like if there was, I don't know if you remember, Hollywood Video or whatever. So you got Blockbuster and Hollywood Video, who like obviously both went out of business, but just to give a random example of a business, like who are you going to invest in? You're going to invest in whichever one has less overhead. And really the competitor that came in that had less overhead was Netflix. They had so much less overhead because they would just mail everything out. They didn't have any brick and mortar stores. Like Amazon has taken over the entire, like e-commerce space, but they've been able to come in and compete with brick and mortar stores because they don't have near the amount of overhead in terms of brick and mortar locations that all these other places have. Right. So whenever you have like two business models that are somewhat similar in the same industry, and then one just does not have the costs that the other one has, you see the one with the lower costs end up succeeding. And as an investor that's, heavily investing based off of like supply and demand tokenomics, that's what I see, and that's why I put my money on in an ETH. I'm not necessarily like a doomsdayer for Bitcoin. I just think that it has a competitive disadvantage that makes it vulnerable to other stuff outperforming it. And that's why, and I want to put my money in the stuff that I think is going to outperform.
It's definitely the most proven, and it's been around the longest. And at this moment, it seems to be the most secure. And in comparison to options outside of the crypto, universe, it is the premier asset. If you're going to put it up against stocks and bonds, well, not so much stocks, but bonds and cash savings accounts, retirement, IRAs, 401ks, all of that, Bitcoin outperforms it. And I think there's little argument that can be made, at least in our sector, that Bitcoin isn't going to keep outperforming at least the legacy systems and the old store of values. I mean, gold is pretty flat in the last, was it 10 years or so, at least compared to, Bitcoin and a few others. But so right now, options wise, Bitcoin's is the place to go. But you can't discount the emerging technologies that are coming out here, and there are if Bitcoin stays stagnant, it doesn't change and evolve. This is software. And if software tells you anything, software is known, or software basically needs to be upgraded. Nobody's using computers from the 1980s. Like, you might be using Windows from the 80s or 90s, but it is so far evolved and upgraded into new versions that it's nothing like the past. And if you use, you know, the DOS system, which is the backbone, I mean, yeah, you would, you know, that has stood this test of time, but the average retail user is not using it because it's a little too complex and it just hasn't upgraded. So there you go.
A lot of good insight.
Yeah, and on top of all that, it can't be discounted either that I will say Bitcoin has probably the strongest community of any cryptocurrency, but also like any company out there. It's like up there with like Apple and Tesla. It's like you got, as far as like diehard community goes, you've got Apple, Tesla, and Bitcoin. And that in and of itself is extremely powerful.
Forrest,
But I personally am more concerned with supply side tokenomics as an investor. But community cannot be understated. So for that reason, I mean, like Bitcoin has that advantage over everything.
You're wrong. Cardano. We actually covered this on Monday. Cardano is they're ahead of Bitcoin.
As far as brand recognition
on the intimacy, yes,
for the intimacy,
yeah.
Gotcha.
You know, it hurt me really bad to say that, Forrest. I'm sorry. I felt really disgusted saying that. I apologize if I came off rude.
No, not at all. No, I mean, Cardano does have a strong community, strong leader too.
Yeah, they have a strong. But the Bitcoiners, the Bitcoin maxis, they're in a breed of their own, man.
Yeah, they're.
When I was down in Bitcoin Miami, and that guy, and I gave him a business card for Sin City Crypto. He was like, he thought it was an altcoin.
He thought it was anthrax.
He thought it was an altcoin. He stood just like, bro. I'm like, chill, man. It's a YouTube. You know what? I'm out of here, man. Like,
yeah, I'm out of here too. We're out of here.
Some push-ups,
and we're Robin and I are out of here, and we're going to hand this thing over to Forrest. He's going to do some amazing TA. We just have one request, Forrest. You can please also do some TA on Polygon MATIC. Some big news this week. It's been pumping. So,
what's the news on MATIC?
So, integrated into Seaport, OpenSea, you can now pay with MATIC. Also, Robinhood added services for Polygon MATIC as well. You can now withdraw and transfer MATIC tokens. And then the Meta news. They added the Polygon chain for their NFTs on Facebook and Instagram.
Oh, nice. I was out of the loop on that. Yeah.
They're really bullish on
Polygon's
Polygon.
a beast. There's actually a platform. There's a trading platform that I'm heavily researching right now. And I actually met the team, and they're built on Polygon. It's called GNS, Gains Network, or it's also the actual trading exchange is called G-Trade. It is built on Polygon. So it is basically the counterpart of GMX, which is a really popular decentralized derivatives exchange, but heavily interested in GNS right now. Not necessarily, I have like a very small amount of GNS stake just messing around with the platform. But that's just going to say that Polygon is huge. They're just becoming this massive conglomerate, and they have the opposite issue of Helium, or they don't have the issue that Helium has. They have tons of partnerships. They've got tons of people and developers building on them. So yeah, Polygon's very, very strong. So let's take a look at the technical analysis. Let me throw off all of our indicators first, and let's just zoom out. And I want to briefly, just touch on a couple of things. We've got really the things that stand out to me are, we had a huge repricing event. Anytime you have a repricing event like this, you're going to give a lot back. We overshoot in the hype, and in the demand. The demand is overstated. We get very speculative, and then we come down and we find an equilibrium point. A lot of times in the bear market, we overshoot the downside, and to me, it looks like we found some sort of an equilibrium point in this zone, just looking at the price action without even throwing on any indicators. A couple of things to note is we do have a couple of what I would call supply zones. So there's a term you'll hear me using more often now. That's a supply zone. That's where sellers have consistently come in. And prices failed to get above. Now we also have demand zones right there. This is where buyers have come in with consistency and bid up the price, right? So those are important to identify. Anywhere in between here, if we can look to buy down here, and potentially sell up here, that's great. Now, we are in a bear market. I don't expect stuff to be breaking all-time highs super soon. I am very, very bullish on the Ethereum merge narrative over the next 6 to 12 months. So I do expect, potential for all-time highs on Ethereum and Ethereum layer 2 solutions. MATIC would fall into that category. I want to throw on the easy bands here. And that's going to give us a better idea of where MATIC is at. So MATIC is where I would call MATIC is being at fair market value. What I mean by fair market value is it's just sitting here near the average, the 21-week simple moving average. And all that's saying is, look, it's been up, it's been down, it's been all around over the last 21 weeks. But right now, it's trading at the average price of the last that it's been priced at of the last roughly 5 months. And usually, if something's trading at that price, it's trading at it what is probably a pretty fair value. Now, as far as bullish versus bearish, this is starting to look very bullish. So obviously, this downtrend, very, very bearish. This was rough, but this was the opportune time to buy it. Buying it in this demand zone or accumulating down in the green easy band region where we were very oversold. Now we've broken the trend. So yes, we are kind of still trickling downwards, right? We're still trickling downwards, and the trend is still technically down, but we've broken the downtrend that we were holding. We've broken the downtrend resistance over here, and we haven't broken it really horizontally yet, but we are starting to move sideways out of this bulk trend. So I would say this is pretty bullish, especially when you take into account all of the news that David just mentioned, and you take into account the overall Ethereum narrative that I think is going to be very popular over the next 6 to 12 months. So I would lean towards bullish immediately. That means I'm going to be biased towards long positions if we're looking to trade this. Now, as far as long-term entries go, the time is unfortunately past. If you really were just dying to have MATIC in your portfolio, it's fair value, but you're not getting any edge. You're not getting any edge as an investor. The time to buy MATIC would have been somewhere in this region below the green easy bands and this big spill off. I could have even have lived with buying it there or there, but this was our opportunity to buy, and we are no longer in the green easy band. What that means is there is risk of downside. Now, I just said MATIC was extremely, or not extremely, but it was leaning bullish. That doesn't mean, just because I'm leaning bullish, just because structure looks good, doesn't mean that this can't come back down. What happens if a war breaks out somewhere? What happens if the S&P 500 drops all the way down to new lows? What if this is the S&P? What if we go back down to test this? What if we come back down to test that or that? What if we get a deeper recession? Something breaks, the housing. Anything could happen here. Bad stuff could happen that is exogenous or extrinsic towards MATIC that could drive it down, and that would create a buying opportunity for us. But it would also put us in the hole if we're taking the risk of buying here, right? So for a long-term position that you're looking to stow away for 9, 12, 18 months, I'm not a fan of buying here. The time to buy was over here. So that's obviously not super helpful unless it's stopping somebody from potentially making a risky purchase. And again, I'm saying that with the context of I think this is probably going to rally. I do think this is probably going to rally over the next 6 to 12 months. There's a lot of positive things. We do have red easy bands coming down to act as resistance. That's not going to be ideal. That's going to cause any upwards momentum that we make, that's going to cause downwards compression. So what we want to start seeing is MATIC spend significant amounts of time over the 21-week simple moving average so we can see the flattening and the reversal of these red easy bands and start developing an uptrend or at least a sideways trend. Now, as far as like short-term trades go, I want to look at a couple of key levels here. First off, we're going to throw on our short levels. We're going to identify where the shorts this down to, right? And it looks like they pushed it down to this 3x short level, and they couldn't get it any lower. What happened was they pushed it down below this level, and then they had to fight this downtrend line, and they found buyers coming in, right? And the buyers basically won this battle and pushed it up above the 21-week simple moving average again. A lot of that's probably due to some pretty good news that's come out recently, right? So I don't like the idea of being a seller here either, right? Because you're only able to really sell to down here, and that's where the buyers are going to come in and fight you. If we did trickle down this downtrend line, the next level of support, and if we broke that level of support, the next level of support would be at around 70 cents. And then I don't mind being a buyer. I don't mind being a buyer in the short term, looking for a swing trade, holding it for a couple days to a couple of weeks with a clear trade structure, right? Not looking to just sit and hold on to this for 3 years, because again, at this level, we would still be buying above where we can get optimal entry points for the long term. So potentially where you'd want to throw a stop loss there on a shorter term trade. Below here, we've got this previous support and resistance here. We saw some demand come in right there. You could buy this support level at around 69.70 cents, keep a pretty tight stop loss. And then the immediate upside would be a retest of 79 cents. That's going to give you a 2-to-1 risk to reward level. But because this is also very bullish overall, I mean, you're getting pretty solid potential reward scenarios if we go back up to retest this local high or this red easy band region, right? So 70 cents is where the shorts are going to have trouble taking it. I don't think that it's going to go there unless something bad happens, because as we've already seen, demand has come in here, demand has come in here. This would just be, hey, if the market bleeds out, if things get dicey here right before the merge, there's a lot of panic hedging right before the merge happens. That's the 9th of September. The merge is happening on the 15th, right? Then you're potentially getting an opportunity to find a really nice long position there, right? So the trade has unfortunately already happened, right? The good trade or the optimal trade for MATIC has already happened. The optimal trade would have been to keep your stop loss below this wick, right? Buy this margin pressure level and look for a return to this local high or a test of this local high, or even just this resistance zone here. And that's, obviously you're up a lot on that trade already if you took it, but that's giving you 3.61 to 1 risk to reward. So right now, as far as long, I don't want to short MATIC. I really don't want to short it into this pattern unless we start to see some sort of bullish pattern developing. You could make an argument for trying to short it. If I go to our short tool here, off of, a retest of this local high or a retest of somewhere in this zone, but I don't like that. I'm just kind of too bullish on MATIC to try to step out in front of it. Now we can find our long levels and see where the buyers are going to start coming in. Obviously, 63 cents would be a dream if we could, see it come back down to 63 cents in this previous resistance level. I would expect a lot of buyers to come in this region, especially if we were still on the top side of our downtrend line, our yellow downtrend line there. But if we move our local low up to a more reasonable level, our last kind of demand wick there, we're starting to see the buyers are already starting to come in. Buyers starting to come in. I'll move this up one more time. And there's where we had that confluence, right? So this is where the shorters had to leave and the buyers could come in. What I mean by the buyers could come in is they could come in and buy on 3. That's what this indicator's, for those who may be new, that's what this indicator's measuring. This 3x long level, this green line here, is showing us where the buyers can start coming in on 3x long leverage and hide their liquidation points below this last demand level, this last swing low, which is very important, right? So there's where we have the confluence between the shorts having to leave and the longs having to come in, right? And that's pushing the price up, and we would have had an excellent risk to reward ratio there. Now, if we get resistance here again, if we get MATIC dumped onto the market here, right? People trying to get out at these resistance levels, right? And it comes back down, you can re-enter that same trade again. Just note that you're going to have worse risk to reward because your stop loss is going to need to be all the way down here. What I mean by that is, actually, let me grab my my long tool. Like, you could re-enter this trade over here and still target another bounce back up here, and we could just get this, pattern where we're chopping up and down in this range. You can make a lot of money there on trades, but now we got to keep our stop loss a little bit wider. We want to keep it below this level, and we're still getting good risk to reward. But the reason is 2.37 to 1. But the reason we want to keep it below this level is because that would be our next line of support. Now, the optimal trade here, if we're very patient, it probably won't manifest, but if it does, I'd probably want to jump on it personally, would be buying at 70 cents. Buying at 70 cents, and then you have two very short-term targets. The first being just this resistance level that we've already seen hold as support. That would be 3 to 1 risk to reward, keeping a reasonable stop loss, and you have potential upside on a longer term, bump and run where we potentially come back up here and start moving upwards. You have tons of upside on that. So that's MATIC TA. Those are a couple trades to look out for. 70 cents and 79 cents are support levels. But I don't want to enter in a long-term position, and I don't want to enter where the current price is on a long or a short. I'd want to wait for it to come to an optimal level. Happy to go over any other charts if we want to, but spend a lot of time on MATIC today.
For sure. What do you think, Rob?
Just thoughts on, is that kind of in the same areas and as far as buy and sell and predictions as far as Bitcoin and kind of the wider crypto market, or?
Lately, Polygon's been outperforming. So Polygon's definitely been in this nice uptrend. But yeah, I mean, everything's to some degree will be, dictated by Bitcoin. But even so, I mean, we've this price action for Bitcoin looks, pretty crummy. And I'm not bashing Bitcoin. I'm just saying the price action looks crummy when you compare it to MATIC price action's been really good. The thing to be wary of with MATIC too is we did break that very strong uptrend line, and now we're in a sideways channel. But yeah, I mean, ultimately, yes, I do think so. The levels we'd want to potentially buy is 78 cents and 69 to 70 cents. So for MATIC to get pushed down to 69, 70 cents, that would probably be a scenario where Bitcoin is coming down to $18.9 thousand, which I believe, let me remove some drawings here and I'll adjust my my local high here, and I'll get rid of my long indicators and my easy bands there. Basically, right now, the shorts can pile in on 3x leverage and keep those liquidation points above this local high without taking on any risk until we get to 18.9K. So if Bitcoin comes down to 18.9K or even 16.8K, that could be what it takes to push MATIC down to these support levels that we'd want to buy of around 69 cents, 70 cents, or even 77 cents, give or take. So yeah, I do think there will be some correlated moves to get us there, and I do think it's quite likely, even though this is a bit of a bullish ascending wedge here that we're seeing on Bitcoin, and we're seeing Ethereum today kind of break out of its bullish ascending wedge. I do think that 18.9K is definitely on the table here. A little crash down there wouldn't be much. It would probably wash out a little some altcoins, but give us some really good buying opportunities. And you'll see buyers have stepped in at this level in the past 3 times. So this would be the 4th time for buyers to step in. And I won't keep going for too much longer. Last summer, saw something very similar where we saw this demand zone develop, and then we saw a basically, kind of a descending wedge, but basically a slow bleed into this demand zone, and then all of a sudden the buyers came in to push it up. And that would be potentially a very similar situation where we've seen the demand zone develop, and if they come in at 18.9K, then that's probably, ripe for a trend reversal or a relief rally. If they don't come in, probably going down to 16.8K, and hopefully not, but potentially 12.6K.
Amazing. Man, where else are you going to find TA like this? I want to know. Where else are you going to find TA like this? Nowhere.
On his channel?
Oh, you're right. You're right. Speaking of his channel, make sure you guys go subscribe to Crypto Stackers Pro on YouTube. Also, go follow our man Forrest at 0x Stacker, even though on Around the Blockchain they keep saying Ox Stacker. And then looks like I'm Big Rob now. Forrest, thank you so much again. As always, taking the time, imparting your knowledge on us. We appreciate you, my friend. Anything else you want to throw out there? Anything else going on you want to talk about before we let you go?
That's it. No, I appreciate you guys having me on as usual. It's always a pleasure.
And the pleasure is all ours, my friend. Forrest, would you be real quick? Would you be opposed to us creating the next emoji being something involving you?
Oh, the forest emoji. That's a good idea.
Someone in the community brought it up. You good with that?
Yeah, I'd be honored. That'd be awesome.
Amazing. All right, done. That's the next one. Thank you to whoever in our community brought that up. So we appreciate it. All right, Forrest, thank you so much again, my friend. We will see you next Friday. Have a great weekend. Try to find some of those dancing videos from this past weekend.
Will do. See you guys. Thanks.
Thanks,
brother. Later.
Bye.
All right. Man, that was amazing.
Take care for it.
You like my my antique photos I pulled up, bro?
That was stupid. That was completely dumb. All right, let's move on. We have some big news today coming out. Finally, is the U.S. jobs report. The U.S. job report, U.S. job growth slows down from a red-hot pace. This is sourced from the New York Times. Job growth slowed in August, suggesting that rising interest rates and fear of a possible recession are leading companies to pull back on hiring. The unemployment rate rose to 3.7% from a half-century low of 3.5% in July. They quote, "Yes, employer demand is cooling," said Anne Elizabeth Connell, which is an economist at Indeed. "In some areas, it's cooling a little bit faster, but it's still strong. It's still robust." A couple charts I want to share. This is the jobs gained are down in August from July. Obviously, we talked about this. You saw the peak in what looks like February. My apologies, literally right there. 714,000 jobs gained in February. We've been on a downtrend with the exception of July, but from July to August, down 0.2%. And the last chart I want to show is the unemployment rate. You can see it's been on the decline, but we are seeing a reverse in trend. Robin, this is the only thing the Fed is holding on to by saying we're not in a recession. The job market's hot. Jobs are there. Unemployment's low. Are we going to see this trend reversal continue to go towards the upside? Are we going to see unemployment get higher than 3.7%?
Yeah, I think you're going to get all the typical factors that are in play with raising interest rates, slowing down the economy, going into recession, all indicative of suboptimal jobs reports, unemployment. And at the end of the day, if a company's making less money because people are spending less money, there's going to be less capital to go in for jobs. The thing is that we just started raising interest rates. What was it, like 4 months ago? 5 months ago?
4 months ago.
4 months ago. And so you're just now starting to see the implications of it. And the first rate hike, what was it? 0.25, 0.25, right? The very first one?
I think the first one was 50, bro. I could be wrong.
I think the first one was
Rocco wants to
0.25,
check.
then it was 0.5, then it was 0.75, 0.75. I think that's what it was. And it hasn't played through the system yet. Yes, you see it immediately when it comes to your home mortgages, and you see it immediately on your credit card interest payments. But essentially, you haven't slowed down the economy just yet.
Here's my issue.
The fact that jobs are still holding steady should be worrisome,
right?
Because you're giving the Fed more ammunition and more room to ratchet up the interest rates.
Not only that, Robin, but if people just are not going back to work or they're not picking up second jobs and we have this big gap to fill with the boomers retiring, you're going to have companies are going to have to raise their wages. And what happens when they raise wages? They don't take that hit on their P&L. It gets passed down to the consumer. So you have a world where inflation's high. Employers are going to have to raise wages to fill positions in the workforce. It's just going to add on top of the problem we have. And so, yeah, that's the issue I have. And I had something else I wanted to bring up, but I totally forgot.
It's pretty simple, man. If if the Fed is trying to slow down economic growth and basically destroy demand, because essentially inflation is one, your purchasing power, and then two, inflation is prices, which is set by supply and demand. And the problem that we've had is that the supply just hasn't been there, and so they can't affect the supply because it's already in the dump. So if products aren't arriving on the shelves in a timely manner and the cost of goods are inflated because of the scarcity of the assets. So if it's hard to get lumber, then you have more people fighting for the same amount of lumber. But say there's less lumber to purchase, there's going to be a bidding war amongst the purchasers. And so, and what happens is the price of lumber goes up. So if the price of lumber goes up, so does the price of the house. And so supply and demand is essentially where we're at. And the supply is the problem. And so if you're trying to tackle inflation, you either tackle the supply or demand, and then you also adjust interest rates. And so the demand is the consumer's purchasing power, basically the economy, the flow of money, the volume of transactions, the liquidity. And if you take the steam out of the market and people aren't spending for the simple fact that you keep ratcheting up in interest rates, you're basically putting brakes on the economy. And that's what they're trying to do. Problem is that people ain't losing their jobs. And so their goal is to slow down economic growth in the economy, which is supposed to slow down corporate profits. In turn, they lay off. In turn, you get a rise of unemployment, which we're not seeing.
There's a few things happening and not happening. One, corporate profits. With the Dixie going up and the dollar strengthening against other foreign currencies, profits do go down. Talked about this a couple days ago. 40% of the top S&P 500 companies, 40% of the profits come from overseas. Second, if you remember, the Fed came out and said, I believe it was June, July, August, or May, June, July, they wanted to dump $45 billion off of their balance sheet and then ratchet that up to $90 billion starting in September. Well, guess what? 3 months, they were supposed to hit 135. They're at 40. They're at $40 billion, so a third of what they were expecting. So do you think that they're just going to go with at the pace they're going, or they're going to try to ratchet up, double the 3-month number to get on pace to what they said they were going to do September, October, November, which is $90 billion a month shed off their balance sheet?
No, they're promising.
They're behind.
They're promising to shed the balance sheet, and that isn't as front and center, so most people aren't really paying attention to it. So if they feel that we're teetering on a recession and they want to keep raising interest rates to make it seem like they're doing a good job, then they're going to focus more on that, and something that isn't as front and center and mainstream, they can hey, you know what, let's not go too aggressive on this balance sheet thing, otherwise we might completely crash this thing. So it's just essentially just a balancing act, man. I mean, I wouldn't want to be in their position. I mean, they put themselves there with all the money printing, but
yeah,
I don't know.
And let's see how it's affecting the different sectors of the market. So this is weekly and monthly performances. This is per sector. So looking at the 1 week, everything's in the red. Utilities down 1.26%. Healthcare 1.6%. Energy down over the last week 3.35%. Real estate down 3%. Basic materials down 6.17%. Now this takes all the stocks and companies that are traded publicly in the specific sector. Essentially, it's like S&P 500, but for these specific sectors. If you go to the 1 month performance, energy is the only thing in the green, up 8.54%. Technology down almost 10% over the last month. Then you have healthcare again down 5%, basic materials down 2.9%, and financial industry is down 2.5%. So, by the way, this is sourced from FinViz. It's something I used a lot when I was trading in the traditional market. FinViz.com, something I'd recommend if you guys are into stuff like this. So with that being said, we're going to go ahead and, one more thing I want to show. And just to kind of, we're not going to look at crypto prices because our man Forrest kind of did our TA on that. But the Fear and Greed Index currently sitting at 25. And it's a chart I found. This is the greed and buy little squiggly chart. And this kind of reminds me of that Wall Street chart where you have euphoria and denial, this and that. So it's something pretty cool I found. Obviously, when you get to the greed levels, you see euphoria. Then as we start coming down, anxiety. It's a loop, you guys. It's a loop. Again, roller coaster. What goes up must come down. What goes down must come up. So, with that being said, Robin, oh, by the way, do you want to add anything to...
No, I'm good.
No? All right. Our first piece of news, Ethereum founder Vitalik Buterin is concerned about Bitcoin security. This is sourced from Finbold. Vitalik Buterin has expressed concerns about the long-term sustainability of Bitcoin security. His first concern is that fees alone will not be enough incentive for miners, and we'll expand on that. Second concern is proof-of-work consensus has a vulnerability that might compromise users' data security, and again, we'll expand on that. And here you go. These are direct quotes from Mr. Buterin when talking about the first issue. Quote, in the long term, Bitcoin security is going to come entirely from fees, and Bitcoin is just not succeeding at getting the level of fee revenue required to secure what could be a multi-trillion-dollar system. Bitcoin fees are about $300,000 per day and haven't really grown that much over the last 5 years. And on its second point, proof of work provides much less security per dollar spent on transaction fees than proof of stake. What would a future look like when there's $5 trillion worth of Bitcoin, but it only takes $5 billion to attack the chain? Does he have a point here?
He's making a lot of good points here. And, you know, we were discussing...
He's a smart dude.
We were discussing this earlier. And if you're not familiar with the Bitcoin's proof of work consensus and how that looks out into the future, I think it's about 110 years to mine all the Bitcoin. And then, it's solely over to fees for the transactions.
And that's what he's saying. He doesn't think fees is enough.
No, and the fees haven't gone up. So people aren't paying tons of money in transaction fees in the Bitcoin network. It's not really known for that. What is it, like $3 usually for a layer one transaction? And it's kind of been in that zone for quite some time, or at least as long as I can remember. It is funny though. I mean, this is the man that created what's known as a standard $200 transaction fee on his network. And so maybe
he didn't create it.
He did, bro.
He did not create
it. Wasn't it at some point in time,
bro?
At some point in time, didn't even think about paying $200 when you're like, say the height of the market, you're transacting thousands of dollars. At some point, you might look at it like, oh, $200, yeah. Or say you look at it and you're like, $160. Oh, that's cheap today.
Yes.
So,
no, you're
And so
I paid for the NFT. I paid $200 for that.
When I minted my first NFT, there was so much hype around that project. I spent 0.6 ETH when it was at $4,000. I spent 0.6 ETH on gas.
You dropped $2,000 on gas?
I made my money back.
I'm just. Yes, but that's what I'm saying. That mentality is so normal now that
Now when I see $20, I'm like, yay!
But
$20 is a lot of money for.
There's going to be a crossroad, and it might not come on one day, but at some point, people are going to sit back and be like, "Hey, man, this Bitcoin model isn't gonna work forecasting out," and it could be the energy. There's multiple factors. Could be the energy usage. And as I was mentioning, if it's I'm gonna one up you, and you're looking at miners competing with one another for hash power, as the hash rate increases, more and more miners are buying more and more ASICs, which in turn increase hash price. Anyways, it's an endless cycle, and if you were gonna get this massive adoption where nations are using it, countries are transacting with it, you're buying goods, a store of value, corporations are putting their treasury assets in there, all the people around the world are using it as a banking system with the Lightning Network. And anyways, if it's this grandeur that the Bitcoin maxis talk about, which I could see that crypto fulfills that, but if Bitcoin were to fulfill it in its entirety, what the hell does the energy look like? And then on top of that, as Forrest was talking about, if the valuation, and Vitalik here, if the valuation of Bitcoin in its entirety is up in the tens of trillions, if
Vitalik used 5 trillion as a number.
Yeah, 5 trillion. That's pretty conservative if you're zooming out and you're looking 20, 50 years in the future.
Right.
And this is supposed to be technology that you pass on.
But
to your kids.
I also think you guys weren't taking into account as the space evolves, as just humanity.
Bitcoin doesn't evolve.
No,
That's
but as humanity evolves, we're going to be able to find energy from different resources, from different places.
But here's the thing. It doesn't matter where the energy comes from. You have a piece of the pie.
There's so much energy that is wasted. So much energy that is wasted.
I understand that.
And that's tenfold what Bitcoin uses.
It's not okay. If you have a pie and the pie is 100 gigawatts. Well, I don't know the terms for energy, but just say you have a 100 is the pie, okay, for whatever unit of electricity you want to use. If 20% of that slice of the pie is green and 80% is carbon emitting fossil fuels, then the world still uses 100% of that pie. Or let's just say that 10% of the pie is wasted and it's not used and it's ready to go somewhere. If the pie goes from 20 to 60%, it doesn't change. It doesn't change the amount of energy that the world needs. And green energy isn't free to build. I understand that solar energy and wind is free, but it is expensive to build that infrastructure. And so this idea that
the miners will build it.
The idea that green energy is just gifted to us from the heavens, perhaps its source is, but you need to capture it. And you make a one-time to build. Okay, look at here in Las Vegas, Nevada. I mean, it took thousands of people's lives to build the Hoover Dam.
Did you watch that on documentary, by the way? On TED?
It's terrible, bro.
Yeah.
And it took years, infrastructure at the time, billions of dollars, and they built in a whole city just to make it. And that's something that at this point doesn't even provide enough power for Las Vegas. And here's the thing, like, as you build more efficient energy, you stop using the less efficient ones. It's the same thing you could say about ASICs. Like, okay, well, this ASIC's a lot more powerful and green. Okay, cool. Well, then you unplug 4 old ones. And at the same time, it's still the same balance. And so if the piece of the pie is 20% green, if it goes to 60% green, it doesn't matter because the world has energy demands and they're going to use it. And if 20% of the world's energy 30 years from now goes to Bitcoin, that's not okay.
Yeah, it is. If Bitcoin serves a larger purpose on a global front.
No, yes. If the larger purpose is to drain the world's energy and put the world in a worse spot than we are now to transact, when there is alternatives that provide the exact same use case, everything that Bitcoin does, every single thing Bitcoin does, all the benefits of it can be copied and done on another chain that doesn't take energy. Like, why does it have to take massive amount of energy to accomplish the same goal? I don't understand. It's like building a stadium with shovels and be like, well, we have 10,000 workers. They can do it. Be like, but we got excavators. We can do it a lot more efficiently. Be like, that's how we do it, though.
You say escalators?
Excavators.
Oh.
And what I'm saying is that
you make good points, Robin.
If the same product, the exact same fucking product is available, that is a store of value, has a fucking wallet phrase that can't be manipulated, the same damn product, uses a fraction of a fraction of a fraction of the energy the other one does. What is the problem? Why is that so negative? I don't understand it, man. I don't understand why you're like,
because it's not.
You have to
it's
use
not as decentralized.
all the energy.
It is not
and
as
you know
decentralized.
what? We'll get more green energy, so it's all good.
It's the argument of decentralization, Robin.
The thing is
what's more decentralized than Bitcoin?
There's other ways of getting to decentralization, and the fact that you got to eat up the world's supply of energy is not the only way to achieve decentralization. It is not. You have other proof of consensus, not even proof of stake. You could go to proof of network power there's tons of them. There's a list of proof of consensus networks. And so the fact that we have to use massive amount of energy, and right now it's not the end of the world. And right now it's a fraction, and right now it's not too bad. I'm just looking into the future, and if this thing keeps scaling, if Bitcoin keeps scaling, I'm just saying, like, what's the purpose? If it can be done on Ethereum's network with proof of stake, if this experiment works, taking a huge network and it isn't compromised and it has the same security, if not more, then what argument can you make? If Ethereum is more secure and it takes more money to hack the network or compromise the network, and they're less than 1% of the energy that Bitcoin uses, what argument can you make that proof of work is better?
It's harder to spend $5 billion on ASICs than it is to spend $5 billion and just buy tokens.
It's just because there is publicly traded companies, the new ones haven't been tested, and it's the most reliable, and it's the one that's been around the longest. So people are just they don't want to change.
What if we go to Mars? I bet you they have some kind of crazy energy we can use for
Bitcoin's
Bitcoin.
dumping, bro.
Everything's dumping.
Yeah.
Is it? I don't know.
Yeah, it actually is.
Everything's dumping?
Bitcoin went from
Here, pull it up.
Went from this is the 1 day chart. Or I mean the 24-hour chart. It went from 20,300 and went all the way down to 19.8. Since we started the show.
What are you talking about?
I mean, it flipped the 20K mark.
Bitcoin's dumping is down $200. You know what is dumping? The freaking Dow Jones, 260 points.
Yeah.
Anyways, that's all I got.
Nope.
Got anything else?
No. Yeah. Well.
I'm starting to think Crit Cats is HP. Are you bullish on Cardano? Just real quick. You bullish on Cardano?
Am I?
Yeah.
I thought you were asking a question for CritCast.
Well, we know they are. Also, we had a new person real quick in the chat. I know I just asked you a question, but before I forget, Crypto Muscle.
Oh,
I don't think they were in here before, but we'll give my friend Crypto Muscle.
Crypto Muscle. Hola! Welcome to Sin City Crypto.
So, Cardano, bullish? No? Yes? Maybe?
What is it offering that nobody else does?
It's Bitcoin on steroids without all the energy use.
Yeah, I know, but
and more, I believe, more obviously scalable and more intermingled.
There's a space for it. You know, that if you are into proof of work and you think that is the future, and you think that is fundamentally better than proof of stake. And you know, perhaps it is. You know, we saw the rise of algorithmic stablecoins. Nobody really pushed back on that idea.
Bro, too soon.
You know, but nobody really pushed back on the idea. It's not like algorithmic stablecoins was here and everybody's like, bro, this is not good. This is not good. You know what I mean? So that craze popped up and then it crashed and died. That whole sector. And maybe we get to a point where proof of stake, one big chain gets compromised because of, you know, the way that the consensus works, and that if you have enough money, you can take over a network essentially. But with the way nodes are spread out and stake pools, it'd be pretty difficult, at least the way it looks on paper. You never know. It could crash and die. And if a situation like that happened, holy crap. Anything that's proof of work would, especially a layer one, would float to the top.
Yeah.
And you know, a situation like that So
Only time will tell.
but they do have some big partnerships. There's a lot of buzz around Cardano. I could see it. I mean, it had a giant rally in 2021, and I'm excited to see where they go. I think my personal thing is there's a few more projects that I'm probably eyeballing that I think have more potential upside. And I'm just going off of longer time horizon where they have stood the test of time, or at least been through one other bull cycle. And I do think they're going to be crossing all-time highs. Big fan of Near protocols we talked about, Flow, and then I do have some long shots. Put it that way.
Speaking of time horizons, our time horizon is up. We did a poll. I believe I saw 63% said Bitcoin proof of work is more secure than Ethereum proof of stake. So that was just interesting. All right, guys, that'll do it for our show today. Make sure you go join our Discord. It is a community-ran Discord. Mark, if you're still here, I added Jimmy. We need to add Redman to the whale channel.
I do think that proof of work is more secure right now, but I think a lot we'll learn a lot after Ethereum's merge.
We'll see what happens.
And maybe they're the gold standard when it comes, because right now the gold standard for security is proof of work and the Bitcoin network. It
is.
You know what I mean? So, but maybe that gets flipped by Ethereum and their proof of stake, or maybe Cardano becomes widely adopted and that becomes a standard with their proof of stake.
By the way, watch out for our video. Speaking of Cardano, later this afternoon, we will do a Cardano video and talk about the Vassal hard fork. Ooh. Also, make sure you smash the like on your way out and check out our merch store. The description is the link is in the description of this video.
The guys want to know, are we streaming Monday, which is
Labor Day
holiday? No, I'm taking the day off. No show Monday.
Seriously?
Yeah.
Rocco, what say you?
I'll be here.
I'll be here too. All right, looks like David and Rocco will be streaming on Monday. Robin,
yeah, I'm taking a day off. I'm coming in on the weekend to fix our network issues. So,
all right,
you guys have fun. All right, guys. Well,
roll the outro. Friends, family, friends, and family, friends. We thank you so much for ending your week here with us at Sin City Crypto. We love you guys. On behalf of myself, Robin, and Rocco, we will see you on Monday. Until then, have a great weekend, guys. Peace.